Hey everyone, me Kevin here. So there's been a lot of talk about regulating cryptocurrencies. Is it going to be bad? Is it going to be good? What is the SEC chairperson going to do? The SEC chairperson has like 29-hour courses over at MIT on cryptocurrencies. So a lot of folks are like, yay, we're going to have a friend in the cryptocurrency space. Well, unfortunately, he's come out recently and said, I might like cryptocurrencies, but I'm not going to be simpatico to a hands-off approach. So let's go through some of the things that Gary Gensler mentioned and then talk a little bit about how this might affect cryptocurrencies going forward. So first things first, the SEC and Gary Gensler have made it very clear that they will, quote, go as far as they can go in terms of regulating cryptocurrency. Gensler wants a very clear rules established for cryptocurrency. Right now, we just have sort of an assortment of speeches and guidelines and court cases and hearings. And so it's really hard for regulators to kind of figure out, like, how do we regulate cryptocurrency? And so I think Gary Gensler is looking for something very clear, like a very rigid framework that is going to regulate all 7 areas of cryptocurrencies that they're interested in regulating, which include ICOs, coin offerings, trading venues like BlockFi, which remember you can go to metkevin.com/BF, deposit money and get up to $250 for free with BlockFi, metkevin.com/BF, lending platforms, DeFi, stable value coins, which I've had my concerns about, custody, and ETF and coin funds. Those 7 areas, they want to have very rigid frameworks or a rigid framework to regulate all of these things in. Now, we do also have that Gary Gensler is potentially even calling for more regulation from Congress to give them more power to regulate cryptocurrencies, although he does say it's very possible that they already have all the power that they need, and right now believes that cryptocurrencies are kind of like the Wild West market still, and Gary Gensler believes that ultimately, if they need extra power, Congress should give the SEC more power to regulate cryptocurrency. So it's very clear that Gary Gensler, even though he's somebody who's done courses on cryptocurrencies and is very interested in cryptocurrencies, it's very clear that he's a big fan of more regulation. And this sets up some potential concerns over, okay, well, what is that potentially going to do to the future of coin values? And what about DeFi or whatever, right? And so we can get a little bit more insight into exactly what Gary Gensler's sort of perspective is by understanding really the role of the SEC. So here's a quote from him. He says, if someone wants to speculate, that's their choice. But we have a role as a nation to protect those investors against fraud. And so this is really interesting because really what Gary Gensler is saying is, look, we're not going to tell you if something is a good investment or a bad investment, but we are going to tell you if or we are going to enforce or try to limit fraud and people breaking the law. So, for example, let's say you invested in Lordstown Motors and the company went bankrupt because their product sucked. Well, that's unfortunate for you, but that's not necessarily fraudulent. Now, what if the company was deemed to be a complete fraud? Well, now it would be open to enforcement by the SEC, right? So the point of the SEC is not to help you determine whether you are making a good or bad investment. It's to try to prevent fraud whenever possible, to try to make sure that your investment is fair and that it's not just going to get robbed away from you. This makes sense too, because even when they talk about custody with crypto coins, like what if you buy on Robinhood versus Coinbase and you don't have your keys. Now somebody else has custody for your coins. Who's responsible if they lose those keys, right? And to what extent should the SEC regulate to make sure that your investment is protected? Kind of like with stocks. We have the FPPC, and these are sort of opportunities for us to reclaim money in the event, let's say, one of our brokerages goes bankrupt. We don't really have that kind of protection for crypto. And we also have a lot of concerns regarding the stablecoin space, right? There's a very real reality that, look, with stablecoins, if stablecoins end up breaking the buck, hey, what happens if they're now multi-leveraged and people say, hey, I want my coins back? Oh, but wait a minute, you staked your coin or you said that you wanted high yield interest on your USDC or whatever. We've lent that out 10, 20, 30, 40 different times. Could that lead to potential collapses when folks run on coins and take their money out, right? Now, this gets argued a lot, and this video is specifically not about stable coins, but stable coins are obviously coming up in this discussion. For example, yesterday, We had Raoul Paul on Twitter mention that, hey, look, don't complain about stable coins going down. A lot of tokens were just down 80%. Bitcoin was down over 50%, but nothing happened. And that may be true, Raoul Paul, but here's the thing. Bitcoin ran up to over $64,000 and then fell to 29,000. Yeah, that's about a 50% decline. But most institutions and people who bought Bitcoin within the last year bought Bitcoin between 34,000 and 37,000. That means people weren't actually really that substantially upside down, which is important to consider when it comes to the stablecoin market, because if, let's say, Bitcoin's, people's average price on Bitcoin is, I don't know, the later buyers, their average price is, say, $35,000. Well, being down $6,000, not that big of a deal. Probably not even going to lead to margin calls. Well, what happens now if, in a worst case scenario, crypto, Bitcoin specifically, fell to, let's say, $10,000 or $5,000? How many margin calls does that potentially lead to? And does that potentially lead to the liquidation of stablecoins, where everybody feels like, oh, well, I got all this money in stablecoins, I have all this extra savings money, let me use that to pay for my margin calls on crypto. Oh, but wait a minute, I signed up for lending on that. I actually don't really have that money. Somebody 10, 20, 30 times down the road has that money because that money has been rehypothecated over and over and over again. Well, now it's like, oh, crap, now you don't have money for this, and that potentially enhances crypto liquidations, right? So you could see really bad scenarios coming, and we haven't really tested a real deep drawdown really since like 2017. The fall that we had at the beginning of March in 2018 was really not that substantial of a fall. In fact, let's go ahead and look at the chart. And it certainly wasn't even that long. Now, it's a good fall, it's a good test, but let's go ahead and go to March over here. Let's zoom in. Obviously, prices were substantially lower, right? But take a look at this. Over here, we had Bitcoin trading for mostly around the, we've bounced around quite a bit, right? In 2019, we went from anywhere around $5,000 a coin to up to $13,000 a coin to $6,000 a coin to $10,000 a coin to $4,000 a coin. So really, yeah, we had a fall, but this $4,000 a coin was not much lower than the $6,400 where we were, or the $3,000 where we were not much before that, right? We haven't seen a very, very substantial drawdown in quite a while. Here in 2017 was probably the last time when we went from 19,800 all the way down to about 6,000. That's losing somewhere around 2/3. These are some big drawdowns, right? And now maybe, and hopefully, one of these bigger drawdowns will never come. We don't really want to see like a 90% sell-off again in the crypto space. And I think the biggest concern now, though, is how many more times are stable coins sort of getting hypothecated, and are we creating a potential environment where we have way more leverage in the crypto space than we do in regular securities that are more regulated, or at least somewhat regulated, by the SEC, for example? Now, I know a usual response from folks is, oh, well, Kevin, remember, like, there's so much debt in the normal financial system. How could you complain about rehypothecation or debt in cryptos? Well, folks, keep this in mind. I wrote this down here. 90% of the money invested in Bitcoin is spent on derivatives. 90%. And a lot of that is traded on unregulated exchanges like FTX or Bitfinance, where people then borrow more money against what they already are trading, their derivatives, which derivatives are like options, right? So when we put all the pieces of the puzzle together, it's kind of like, yeah, it's probably actually not a horrible thing to have more regulation in crypto, because it's so dark and murky right now. I personally have kept my crypto holdings to less than 4% of my portfolio because I'm just nervous about the lack of transparency. Now, again, I know that the regular financial system is very arcane as well. Trust me, you got scumbags like over at Citadel. You got a lot of shade happening, okay? I agree with that. I just worry that what if those same players are going into sort of the Wild West of crypto and doing what they're doing in the regular financial space? Even more and even worse, right? So that's something to keep in mind. But here's another thing to keep in mind, and I think this analogy is really, really good. Gary Gensler came up with this analogy, and he says that automobiles didn't take off until governments laid out the rules. Automobiles didn't become popular until we had traffic lights and speed limits, because public safety actually helped make cars go mainstream. And by bringing cars into the sort of the inside of government, you can create broader adoption by giving people more comfort and safety. And see, this is really interesting because now we look at the potential benefits of regulation. So now rather than looking at regulation as, oh no, this is crappy, this is bad, this is going to be horrible for crypto, the last thing we want is regulation, we can actually potentially look and go, no, you know, some transparency and oversight, like guarantees that I won't lose my money if I have it sitting at Coinbase, some form of guarantees that if I have a stable coin and I have it lent out, it's very clear to me that I am lending something rather than having it there as savings, or I know who it's lent to, or rather whom it's lent to. How many times is it then lent out? Is it re-lent out again? Like, how can I track where my stable coin is, right? How much risk am I really exposed to? I think additional regulation could help foster some of those changes or benefits. That does unfortunately go kind of as a slap in the face to the purpose of crypto, which is don't regulate me, bro, right? But the reality is, this is where we're likely heading. So we don't want to stick our heads in the sand. We want to be real that Gary Gensler plans more regulation. We don't know when. He's got a lot of things going on. You know, you had Archegos disaster earlier this year, the GameStop disaster, people were clamoring for crypto ETFs and that. But personally, even though there's no timeline, I'm optimistic to see some kind of regulatory framework. I do think some regulatory framework could create some temporary downward pressure on cryptocurrencies in general, but those could be buying opportunities because I'm actually bullish on more regulation coming for the reasons that we've really outlined here. I also don't believe that cryptocurrencies will just vanish. I mean, at this point, we have so many crypto exchanges. We have so many institutions invested in cryptocurrencies. We have universities in cryptocurrencies. We have PayPal, Square, and these massive Visa, massive companies with a vested interest in cryptocurrencies. NVIDIA with their Ethereum, the graphic cards they make are great for mining Ethereum. We have so many vested interests in cryptocurrencies surviving. I'm actually bullish. I think it's all great. And so what I've been doing lately is buying the dip, and I plan to keep buying the dip. Now, I've been nibbling. I've been pretty soft at buying the dip. I haven't bought in the last few days because obviously Bitcoin ran back up to 38,000. But anytime it's been around like 29 to 32,000, I've been buying. And I'm curious. I'm very curious about how much more of a dip we could see if we get some SEC regulation. Personally, I kind of would love for Bitcoin to briefly fall to like 15K just to kind of like really shake things up a little bit and like test the market really well. And that would probably make me feel a little bit more comfortable because I do think a fall to 29,000 is not really a test when most people who bought in last year averaged in somewhere between 35 and 37. So anyway, which is kind of where we sit right now at 38,000. But anyway, just some thoughts, open dialogue here, nibbling, bullish on potentially regulation creating a buy the dip opportunity, but then also regulation leading to broader adoption and more safety and security for coins overall, and more transparency on how much lending is going on. So my thoughts, want to share all this. Hopefully you found this helpful. If you did, consider sharing the video, consider subscribing to the channel. Let me know you want more of this kind of content. If you like the way I share my ideas, consider checking out my programs on building your wealth, link down below, and that 40% off coupon code. And folks, we'll see you in the next video. Thank you so much. Bye.